that'll preface at the start there in terms of what we're talking about here. Obviously, if you look at a Sydney market at the moment, that price point is well off the mark. But just relating it to Melbourne at the moment, it's a 400 to 600k price point for us. The reason why we like that is anything less than 400, we think you're probably in a location that you're going to get a tenant you don't want. Anything above 600, not saying it's a bad thing, but we just like the 400 to 600 because it's affordable. So when it comes to a time when you need to or want to sell, we think you're going to have a broader audience to sell to. That's part of that risk mitigation. Now, there's some wonderful opportunities within that sort of price point, and we'll talk about some of the things that have happened over the years. New property, because of lower cost of ownership. So for those of you who know Victorian laws well enough around stamp duty, there is some massive concessions available if you're buying new and perhaps off the plan, where you pay $2,500 or $3,000 in stamp duty instead of $28,000 or $30,000. It's a big difference. Depreciation we talked about earlier in terms of the the tax benefits, also great for new property, but also lower cost of ownership means, in our view, the maintenance side. So there's no, you get the phone call a year in, it's got to be rewired, or it needs, new bench top, or it needs this just to keep a tenant happy. Well, this thing starts off brand new, high quality, and does what it needs to do. And that's really what I think an investment should be: low maintenance, low headache, and tick over in terms of the numbers, making sure the valuation is right. So even things that are done off the plan, as an example, we have independent valuations to show before you even look at it. So therefore, there's some comfort that if you've got an A-grade location, with a price point which has been independently tested, we think it's pretty sound decision to have a look at. So there's some of the things that we teach you and walk you through as well. Location's got to be proven. So none of this mining towns and boom towns and growth corridors. I hate that term, where you're going to get hopefully a train station in 5 years' time if we get 3 new elections and so on and so on and so on. It's not a place to invest. You want something that's proven. You want a suburb name that people know, people want to live in. And there's some of the things that we'll talk through. Some of the things, you'll see this in the fundamentals that we focus in on, is the demand within the area. So how many people are actually looking at either property to rent or property to buy within that particular suburb of whatever type that it is in terms of property. And it's quite interesting because in Melbourne, the average is 612. If you go online, it's 612 views per property. So finding suburbs where you've got close to 800 or in excess of 800 views per property is quite a high demand area. There's some of the things that we focus in on. The returns, slow and steady. We educate and educate and educate that you will not wake up tomorrow and find that, you bought a property yesterday and you've just become a millionaire day after. It does not happen. And so we need to make sure the mindset's right. And what that does is, it makes people sleep at night. It makes people, see, and it takes a little bit of time, go through that journey and see that this thing is quite sound, and there's some great benefits out the other end. The other thing too, I think that gets missed a lot, is the renting. So people focus in on capital growth numbers and, can I save a little bit on here on a buying price, etc. But, being able to rent it. So one of the, coming back to demand, proven location, etc., is making sure there is absolutely demand there for renters. So there's pockets, and quite a few pockets within Melbourne. Sydney's no different, Brisbane's no different, where there is a huge oversupply, and the rent side is going to continue to suffer for a long time to come. So again, want to stay clear of that, and we can show you some of those things as part of our research. So those